You think the monkey economy runs on numbers, banana counts, vine interest rates, and jungle trade charts. But what if I told you it doesn't? What if I told you the economy of the jungle isn't about numbers at all, but about ambition, fear, and hidden decisions, a psychological drama disguised as policy? In the early season of 2007, the jungle looked calm. Banana banks were thriving, tree huts were selling, and the markets unstoppable. But beneath the calm, a silent pressure was building, unseen, unstoppable, waiting to explode. The stage was set for one of the greatest financial earthquakes in monkey history. This is the story of how it happened, and how smart capital monkeys survived when every other tribe fell. The global jungle was booming. Every monkey wanted their own banana tree. Banana banks began lending fruit to anyone, even those who could barely climb. The belief was simple. Banana trees always grow taller. From the high vines of wall tree to the smallest forest huts, every monkey believed it. But what no one realized was that this dream was built on weak branches, and soon those branches would snap. Why should you care? Because the same forces that caused that collapse, greed, leverage, and blind optimism, still swing through our economy today. Understanding them is what separates ordinary monkeys from smart capital monkeys. It began with one belief: more is better. More loans, more trees, more profit. Banana banks lent fruit to every monkey, even the shaky climbers. They called them sub-banana borrowers. Those risky loans were packed into complex fruit baskets, mortgage-backed bananas, and collateralized banana obligations. They looked shiny and safe, but inside, they were rotting. Big banana firms, names like Bear Stearns and Lehman Monkey Brothers, made billions trading these baskets. Even the elder gorillas running pension trees bought them, believing they were risk-free. Then came 2007. Banana prices stopped rising. Borrowers began defaulting. Those safe baskets started to decay from within. By mid-season, 2 of Bear Stearns' hedge vines collapsed, the first warning tremor. Then came the fall of 2008. Fannie Macaque and Freddie Chimp were seized by the Great Tree Council. Panic spread through the jungle. And then, the unthinkable happened. Lehman Monkey Brothers fell. Billions of bananas vanished overnight. Markets froze, vines snapped, and the jungle teetered on the edge of collapse. That's when every monkey asked who truly understood the system and who was just swinging blind. Let's break it down. 1. The leverage trap. Lehman Monkey Brothers were leveraged 30-1. For every banana they owned, they borrowed 30 more. It was like building a banana tower on twigs. When prices rose, profits exploded. When they fell, everything collapsed. That's the dark side of leverage. It multiplies gain, but amplifies pain. Smart capital. Insight: leverage isn't power, it's borrowed confidence. 2. The illusion of safety. Those fruit baskets sold as AAA safe. But that safety was fiction. The model said, banana prices never fall everywhere at once. But the models forgot monkey behavior. When one tribe panics, the entire canopy shakes. Smart capital. Insight: if you can't explain your fruit basket simply, it's probably rotten. Complexity became camouflage. Risk was disguised, and everyone bought in. 3. The confidence collapse. When Lehman fell, trust vanished. Monkey banks stopped lending to each other. The flow of fruit, the jungle's lifeblood, dried up. It was like the river stopping mid-season. Even the strongest vines began to wither. Smart capital insight. Liquidity is life. When trust dies, Cash becomes oxygen. 4. The psychology of the jungle. The real cause wasn't math. It was mindset, greed, fear, denial, overconfidence. Lehman's chief guerrilla, Richard Fuld, refused to sell early. He said, "We don't take losses." That pride became poison. The jungle doesn't reward ego. It punishes it. Smart capital, insight. Conviction builds wealth. Stubbornness destroys it. The fall of Lehman Monkey Brothers wasn't just a failure of finance. It was a failure of perception, an overconfidence in systems, and an underestimation of psychology. Smart capital monkeys saw through both. Because true intelligence in the jungle isn't predicting the storm. It's building a nest that survives one. Those who thrived after the Great Banana Collapse had no secret formula. They had discipline. They practiced second-order thinking. Not what happens next, but what happens after that. They saw panic as opportunity. They knew the market moves not by math, but emotion. Smart capital moves slowly, observes before reacting, prepares before predicting. Smart capital insights. Leverage is power, borrowed from the future. Complexity hides risk. Simplicity reveals truth. Liquidity is survival. Patience is profit. Emotion drives markets. Awareness drives success. Because in every jungle crash, the cycle repeats. Optimism, leverage, complacency, collapse, reinvention. Those who understand the cycle control their destiny within it. So when the next storm hits, and it will, ask yourself, am I reacting like the crowd or thinking like smart capital? If this story opened your eyes to how ambition and leverage can shake the jungle, the next one will take you even deeper. Because while Lehman's fall showed how banana capital can destroy itself, the next story reveals how debt controls everything. Every fruit traded, every vine stretched, every drop of sap exchanged, tied to one silent force, the banana debt cycle. It's a story of power, of currency, of control. And it's happening right now. So if you're ready to see how the invisible hand truly moves the jungle, hit subscribe and step into the next insight. Because this is Monkey Mindset, where money meets psychology and curiosity meets capital.